Good afternoon, everybody. It is Tuesday, January 14th, 2025. It is 4:15 p.m. The market is closed. Today's Trading Trends episode. Today, really an interesting day, kind of like three trends in one day. Today, we'll look at an intraday chart of the S&P, and we'll stay in ETF land today since there's some movers and shakers, especially ahead of CPI tomorrow, an important number. Today, really about China, home builders, and regional banks. Those specific two areas, something we haven't talked about for a while. And rotation is the lifeblood of a bull market. A lot of people freaking out about the market, throwing in the towel and things like that. We'll take a look at the charts. I think the fear is a little bit overdone. You are getting a correction that kind of happens only 3 times a year. We'll take a look at the charts when it happens in this velocity. It happened in April. It happened in August. And it's happening right now. We'll take a look at the charts. But yeah, today, if you were in China, home builders, regional banks, they were all popped up 3%. Biotechs down 3%. There was only really one nasty area that closed significantly lower at the end of the day. It was healthcare and your biotech groups. So without further ado, let me share the screen. We'll get into the doc here, and you'll see it in writing if you can't bear my voice. My son is actually also homesick today, so I'm out of sorts, and he may come running in at any second because he is tired and dehydrated. So here is, that pretty much sums it up. You see, I guess there's home builders. Here is the China, the nation of the People's Republic of China here enjoying their gains today. But there you go. China, home builders, and regional banks all rally 3%, while biotechs drop 3%. So, that in that regard, pretty simple day. We'll get into the charts. Before we do that, though, let me share my screen here and go to the intraday on SPY. Meanwhile, if you have a ticker or something like that, drop it in, and I'll take a look. And also subscribe if you like what we're talking about here for the most part. So really fast intraday. Actually, real fast. Let's go on the movers. There was a big ranges today, as I said, 3 trends in one almost. Tesla closed down 1.7. I'll look at the big movers. Meta down all day today, down 2. MicroStrategy's up 4. Bitcoin had a nice day. Right now, it's currently trading at 96,500. And other big movers, IWM, the big leader in was Russell. The small caps up 1.1. AMD continues to go lower, down 1%. A dog that is. Palantir rebounds a bit, up 1.4. JP Morgan up 1.3 ahead of their earnings tomorrow, and they kick it off with all the banks. So we are full-fledged earnings kickoff tomorrow. All right, enough of that. Excuse me. So now our opening bar was here this morning. We had the PPI number. Pretty weak print. Market did not love it. And I mean, initially we went a little bit higher, as you can see here, that top candle, but really ugly trading pretty much all the way to the 1230 low, right around the European close. And then we had a nice rally all the way to highs, pretty much from 130 to 230 here, contending with very close to 584 SPY, and then ugly selling at 230 brought us below VWAP. VWAP was 582 even essentially. And we closed at 581.5. So not super, encouraging today, although we were down much more. It looked uglier, at around noon. As I zoom out, so as I said before, about 2 weeks ago, I think it was, this is not just a buying calls environment. I see sloppiness with an upward bias. Well, like I said, just to go over this, a lot of people freaking out over the market. Again, it's still a rising 200-day moving average. It is consolidating a bit. I think people have lost a little bit of faith because of the leader being semiconductors has done nothing for about 6 months, and that's why people are getting a little bit antsy. And Nvidia's back where it was, and that's a leading semiconductor for the most part outside of Taiwan Semi and Broadcom in terms of returns and contributing to the S&P return for 2024. But this, I give it the benefit of the doubt. Innocent until proven guilty, man. I'm sorry. But going back to, I love using stochastic momentum mix. In altogether, not to go into this too much, but basically lets you know in terms of velocity where you fell from with the same momentum, as it were. So for example, right here we're at a negative 20. I'm just going to use this, and I don't think I've really talked about this on the air, but I use it a lot. So we basically had a similar collapse in March and April. And I literally look at this. I used to do this with overlays. I'm not going to do it here because it's going to slow down, but you can. So like I said, so going into here from March to April, if you did an overlay here with this slope to that swoon here, okay, it happened there and we resolved higher. It happened again in August. If you put this overlay over here, Over there, you have almost the exact, in terms of percentage collapse, that you did in April than you did in August. Okay, obviously that was a catalyst-driven event through Mageddon, whatever. I'm just looking at the charts. It kind of looks like, if you want to be simplistic, it looks like every 4 months you get this kind of swoon. You should have got one in December. You didn't. You got pretty much, new highs actually in the beginning of December. And is it now that we're, pulling that forward, and now we're getting that sell-off with that support right around here? I think so. All right. Even if it got within 1% of the 200-day moving average, around 560, people would be freaking out. I think it's a buying opportunity. Maybe you calm yourself in terms of the velocity of year-end target, of modifying it literally for SPY from 750 to maybe. And I have calculations for this. It's not just, pie in the sky, but my previous had been, ultimate bullishness, late fall. I think I had 750 for SPY. Right now I have it closer to about 725, 730. So a little bit of the edge off the ball, if you will, but still the upward momentum is there. Yeah, as I said, like the stochastic momentum, last thing about this is it really does a good job of recognizing where you are in terms of the environments. It's just kind of like a GPS to let you know where it is. And also it boils down to also the life that the stock has, if you will. I'm stuttering a lot, under the 50 RSI or above the 50 RSI to replicate those similar conditions. So again, as we were back in April, we had similar, after that had happened, a similar environment in the RSI. Let's talk about number of days consecutively. So it looks pretty much in April, although it was kind of a little bit more sharper here until we fell out of bed. And then I'm looking at it here, right here in August. Yeah, very similar. If you look at it, the high to low, pretty similar. This took 3 weeks. This took about 3 weeks, and then this taking a little bit longer, which is why, probably a little bit more people are getting nervous. But again, short term, I see a little bit of messiness. The bigger fear I have, and I'll talk about the market here now again, is I think we're going to burn a lot of energy over the next 2 weeks or so. It's going to have people throw in the towel, and that's fine if that's what brings, better owners of money, as it were. But I think we're going to exhaust a lot of energy to get to about 595. I think it's going to take a lot of work. These 12 points, if you will, like less than 3% to the upside, I think it's going to be exhausting for the market to get to about 600. That's just what the technicals say. That's going to be the plot for the next 2-3 months. Next 2-3 weeks. I want to see how this gets above 595. I think it's going to be a lot of heavy lifting. So let's see. So I gave you kind of a bullish picture. Stay bullish, of course. Stay long and trade accordingly with risk. But I see a lot of heavy lifting to try to get to this 595 area. It's going to be work, I think. And we'll see. Of course, tomorrow's a big CPI number. So the market thinks. We'll see. Typically, it comes in line, but everyone's a little bit scared if the inflation being hotter. TLT hit a 52-week low again today, which means what? Higher rates. So let's take a look. So KWEB we had called out, I believe last week, and I think we said look for this one to move. So KWEB, a big one today, up 2.9%. Today, your big mover. It was all China. This is very similar to the FXI chart. Maybe we'll look at one. Let me see if we're looking at that later. No, so this will encompass your China move. So again, we said it's probably going to try and make a move toward the 200-day moving average. I think it's going to try and make a move towards 2930, which is just a clip above the 200-day moving average, probably frustrating investors. And then it's going to do more sideways tug of war right around the 200-day. So I think China is going to be frustrating folks. Like I said, I think the United States potentially with S&P will be frustrating folks for a few weeks, but this looks like an uglier picture. I also don't like that it hasn't been even above a 50 RSI since December 13th. I don't really love this chart. It is a rising 200-day moving average. Slowly, it's at 2916. Is that near-term resistance? I think it gets there a little touch above, and then it's going to basically trade sideways. But this is going to be a frustrating area today. A healthy gain. Here's something we haven't talked about for a while, with rates just be going up and up and up since the Fed cut. Go figure. Last month. So home builders. So this thing has absolutely rolled over, just clearly rolled over. This trade was the belle of the ball back in Thanksgiving. This has had a nice, rally from 101 to 106. The group I just do not love. All this work today to get to 107 was a 21-day exponential moving average. I don't like this chart. Really, a difference happened when the Fed cut rates on December 18th. This started to sink under the 200-day moving average. If you're a simple program algo trader, you would just exit that day on the 18th. And really, that is your resistance at 111. Don't love the close here at 107. Even if this gets super more bullish, maybe it gets to 110 is where I probably have a limit, but I don't think that 200-day is going to be touched in the short term. Looks like an ugly area. I would actually expect this to peak very soon, maybe around 110, and that'll provide a short opportunity if you're gutsy to take that down to about 105 or so is where I see that most likely going in terms of probabilities. I'm not no Salama. It's really just dealing in terms of probabilities where the path looks set to go. But Homebuilders, a nice day, up 3% today. This thing has been a dog, though. And then lastly, another area has been a bit of a dog, but today a nice one, the regional banks, up 3.5% today. This name peaked also almost identically with Homebuilders in November. Again, rotation, lifeblood of the market. These names were not in vogue for the past 2 months or so. Look what's happening now. A nice 3.5% gain today. Do we think there's more in store? I think this, you're going to maybe love what I say, but I think this exhausted a lot of energy coming from 57.5 to 61. I think that's kind of the move. Potentially, if it has more gusto, it gets to 63. It's a nice looking candle. Lets me know maybe it actually does get to 62. Tomorrow's going to be a big deal with the CPI. Maybe a little bit more to go on this, but I think this is almost done. And then it's going to trade around, $61, $60 or so. But don't love chasing it here. It's really giving you many chances. Still rising 200-day moving average. There's definitely worse spots that you can be in. This thing hasn't closed below its 200-day since June. So, there's weaker spots, but I think that may have been the run. Maybe a little bit more to, like I said, to about 63 handle, and that might be it for this leg. All right, so those were the gainers today. If you were in China, home builders, regional banks, congratulations. All those September names, congrats. It was that let's move into it 4-month rotation. They did well. The area that did not do so well, this was any biotech fund you looked at, the XBI, the IBB, and then obviously the broader healthcare did not do well. Let's take a look at this. XBI down 2.8%, call it today. Yikes. Who is calling me at a time like this? So the XBI, ugly looking chart. I'm looking here. Really, the clock started on December 12th. Ugliness there with the close under the 200-day moving average. We had highlighted a similar basket, and we'll look at it in a little bit. Actually, it's ARKG. It's Kathy Wood's basket of this, of biotech stocks. But I don't like this area. It's an interesting move how fast it's come. It's gone from $94 7 days ago to $87 very quickly. So to me, the support I have right around $86. So I see some oscillations, potentially tries to make moves towards 89, right around where my cursor is, and then still resting right around that. But a weak looking chart. The 200-day moving average now is going lower, and life comes at you fast. This had 52-week highs in mid-November. On November 11th, this was trading 105. And get a helmet because everything changed December 12th for the biotechs. And like I said, if something were to happen like that for the S&Ps and we close under 55, it's a self-fulfilling prophecy. You're going to have folks exit, and it's a sentiment change. That's going to be very significant, but that's a ways away if that happens. So that's XBI. I can look at the healthcare ETF. It's very similar. Actually, we'll just look it up really fast. I don't want to spend more time on this because this thing's been a dog too. So this name peaked even before early September, as I said, at a 52-week low, ugly coming the week before Christmas, down 1% for healthcare. Just ugly looking char. I had been in this, and like I said, this was the name I said. Thankfully, options do expire, just expired worthless, and I got the heck out of there. I don't like this group. I think this trades towards 136 or so over the next 2 weeks. I am talking about market rotation being the lifeblood of the market, but there are better areas than this. I don't like the rates overhang. This name, healthcare, has had literally maybe 3 trading sessions above a 50 RSI since Columbus Day. That's not so swell. And the 200-day is rolled over. Again, it could not muster a close. Look at this. What an important week. The end of November, early December. It cannot close above the 200-day moving average. So for me, this thing had lights out starting November 12th. I don't like it there. Boopity boopity bop. So that is healthcare. I'm not going to spend more time on that, but yeah, if you were in healthcare or biotech today, you were not a happy camper. All right, top 3 gainers of the past 5 days. No repeating charts. This is how I know the market has an overhang over it. The number 1 gainer of the market in the past 5 days, VXX. No bueno. So volatility is your top gainer, even down 2.2% today. It is up 9% in the past week. I told you I'm looking for this to make a move about 49, 50, 51, right around there. You can check the video from last week. We actually got to 51.5 yesterday. It got to 51.5. So here's my thought process. I think it's the 200-day moving average is at 49 even, let's say. It's going to make, I believe, another move above that. Maybe CPI is a catalyst tomorrow. But I do think vol is still in fashion for the next week or so as it tries to make a move towards, call it close to $50. I do think it trumps and goes above its 200-day moving average for a little, kind of like what you had here when the Fed cut. I think you'll have a little bit of a vol, maybe attempt on one day, and then it goes back lower. But I still see vol up short term, and then SPY downward bias, but very small in absolute terms, in terms of percentage loss. Okay, so that was the number 1 gainer of the past 5 days, VXX. Congrats if you're long, volatility. Number 2, go figure, is natural gas. We said this one was going to be a fast mover. It was up 1.4% today. It's up 8% in the past 5 days. And look at this, a sentiment change for the 200-day moving average. This thing it's been different now ever since right there, December 19th. So things are happening. I did have a bit of a call on that, guys. I think we said look for this to top right around 19 handle. 18, I have right here, my figure is 1890. So around there today we have 1840 close. I actually hit 1883. I like nat gas. I can't believe I'm saying that. But there's rotations happening. There are rotations happening underneath the hood. The chart does not look horrendous. The 200-day, albeit small, is rising. And that gas is actually, I can't believe it, has traded above a 50 RSI since December 10th. There's definitely more spots that you can be in. I don't want to chase it here, but I do think in the future, this 1540 200-day moving average will hold. So absolutely astonishing. And, there's, producer levels, and there's important, supply and demand dynamics of this, of, why oil is not going to drop negative again per barrel, for example. So this does have some actual value to help heat homes globally, as it were. So yeah, I like this one. I wouldn't chase it up here. If you get pullbacks to about 16 even, 1620, right around there, and this thing is volatile, look at the size of the candles with a $1 ATR or average true range. You potentially have a pullback. I could definitely see a pullback coming to about 16.5, which is the 20-day moving average over the next 2 weeks, maybe on some volatility, and that would be entry potential. So we'll see. More to come, but this chart looks good. I can't believe I'm saying that, but it looks good. I would buy it on pullbacks. All right, and then the other one, again, so vol crushed it this week up 9%, nat gas up 8%, and then right behind it is oil up 5.5%. So, this isn't tech and ARK and stuff like that. Those are actually on the loser side. As we look at oil, I said it's going to be a frustrating chart for investors. Oil up 5% in the past 5 days, almost for 1% average a day. Today down 70 bips. I think this has had quite an extension. I'm surprised of just how much it's held in terms of USO dollar price. I'm surprised how much it's held, $77. I thought this was going to pull back soon towards $76. Again, the 200-day moving average is 75.40. I'm expecting a pullback for this. Today could be the beginning of it. But I think this moves towards, first off, $77. Actually, I'm going to stick with my gut. I think this goes towards $76 over the next 2 to 3 weeks, which would be a $5 reduction. So pretty significant. So we'll see. This has been a nice move off of these December 6 bottoms of $70 all the way to 81. Hopefully you cashed out, in my opinion. But the 200-day moving average is rising. It just hasn't done much all year, oil, give or take, since mid-May. I just don't like the range, and I think there's better there. personally. All right, but it's a good week for it, up 5.5%. Top three losers, I can't talk, of the past 5 days. No repeating charts. We'll do this very quickly. ARKG is the biggest loser of the past 5 days, down 10% on an average of 2% per day. Today is down 3.5%. Ugly. So this is, look at this, how beautiful technically this has been trading. Denied, Dikembe. Here, one close I don't count as a character change. This was a messier week here in December, and this again 2-3 sessions above it, and now it has a hard time. Today down 3.5%. So my take on this is, and we just talked about XBI, which this resembles to an effect. Don't like this group right here. I think this goes towards $22 even, about 22.5, potentially new 52-week lows. The 52-week low is back here November 19th at 22.27. Potentially goes below that, and then if that happens, it could really I don't want to say crash, but it could really move lower as I don't see other, local, closer support. But I don't like this area for the next 2 weeks. This candle lets me know that the selling's not done. I think this wants to get to about $22 in the next 2 weeks or so. I'm not desperate for shorts. Otherwise, I would write it down. But this looks, this looks like it's going weaker. Oh man! All right, two other ones. Uranium down 7% this week. So it's been ARKG down 10%. Uranium down 7%. Again, lots of things that we're talking about, big movers this week. They have tests with relationships right here with the 200-day moving average. Uranium has its own issues as it really hasn't been able to close more than one time above its 200-day since, basically Fed week, the couple days before the Fed. Don't like this. It looks like it's having a bit of a breakdown. Today was up 35 bips, yes, but don't love this group. I think this trades lower to about 26 even, which is right where my cursor is right there. That's not going to instill a lot of confidence. And this name hasn't had a session above a 50 RSI since the first week of December, and it's coming off oversold conditions. So even, let me see if that a bearish divergence here with no new price lows. Yeah, I would think this would be lower, and then that was a sharp rebound you had. I mean, this is a big move from 26 to 29 handle. It's a big move, 10%. Just do not like this area for the next 2 weeks or so. I think this rolls over to about 26 even. And then last chart, losing area for the market. So it's been ARKG down 10%, uranium down 7% in the past week, and one of the most important spaces of the market, the leader outside of Bitcoin in 2024, my baby, the SMH, down 6.5% in the past 5 days. Today, up 1/3%. It's funny, I had a friend text me the other day, said, SMH is at 242, your level, what do you do? I said, I just don't think it's going to be in vogue, like I said, for the next 2 weeks, but I think your risk to the downside is minimal to get into an absolute superstar. This is you buying, Steph Curry or LeBron, peak, but, the team overall is just not crushing it, unfortunately. So don't like this area. I see sell-offs taking you. So let me back up really fast. So I believe this next sell-off here, I don't like it. SMH for the next week to 2 weeks, and I see the sell-off taking you to about, looking at Bollinger Bands here on a different time frame and a different chart as well. I mean, 240. So it's going to confuse folks. So the 200-day moving average is 242. It's probably going to go underneath it a little bit. You saw today's range. We were as high as 248, as low as 242. I see us going to about 240 over the next week or two. That'll give you another entry. This is not a significant, sell-off or anything. It's very range-bound in semiconductors. Once it breaks out, I think you're going to want to be a part of it. And that's going to be your backdrop for the market, in my opinion. Okay, so top 3 trades of the past 5 days. I'm wrapping up here. If you were short ARKG, long vol, and long net gas, so trades that come out to me is, long ARK put spreads, or long VIX call spreads, or long net gas call spreads. Those are the 3 areas that really generated a ton of alpha this week. All right. I will see y'all another day. Maybe we'll get into some stocks. Peace.